What is up, guys, and welcome to another edition of the Marauder Show. Be the market, one trade at a time. All right, today I'm going to be going over my Sunday Market Watch List. So these are going to be some of the plays I'm looking at as we enter another trading week. All right, so the first one on the list is ticker sign FCEL, which is FuelCell Energy. So the time of recording this, they are at 86 cents per share on a little bit of a bearish downward trend. Their current price is below the moving average 10, moving average 20, and moving average 30. So those are the indicators that I look at as far as movement is concerned and price action. For the moving average 10 is at 86 cents, moving average 20 is at 88 cents, and the moving average 30 is at 90 cents. So they do have earnings coming up. Their earnings will be tomorrow, and it will be before the bell. So before the market opens, FuelCell Energy should give their earnings. They're in the renewable energy sector, kind of a green EV hydrogen initiative company. They do a lot of retrofitting of systems in the market as far as power generation. So they'll convert systems that are solely built on using the grid to having hydrogen producing fuel cells, basically in the name itself, as well as some of the Going Green initiatives converting some facilities over to more renewable energy sources. So going into fuel cell, they are held majority by the general public. So 56% or about 57% of the ownership of the stock is owned by private retail investors, while only 43.1% is held by institutions. So it's very unique in that aspect, as majority of retail holds fuel cell, as opposed to a lot of different companies, corporations, or hedge funds like Vanguard or BlackRock own majority of the shares of different companies. This one is held majority by retail, which I think is very interesting. So what does this mean overall? Many institutions measure their performance against the index that approximates the local market. So they usually pay more attention to companies that are included in major indices. As you can see, institutional investors have a fair amount of stake in FuelCell Energy. This suggests some credibility amongst professional investors, but we can't rely on the fact that alone, since institutions make bad investments sometimes, just like everyone does. When multiple institutions own a stock, there's always a risk that they are crowded in a crowded trade. When such a trading goes wrong, multiple parties may compete to sell stocks fast, and the risk is higher in a company without the history of growth. Down here, there's a chart that shows kind of the difference between the revenue, earnings, free cash flow, and cash from operations. So the cash from operations has gone up slightly to almost in the positive. You have the revenue has increased significantly and projected to continue to increase as we go further into 2024. They also have a projected cash free or cash from operation going up as well. But financially, they are in the red for three of the positions. So free cash flow has been something that they've struggled with significantly, as well as their earnings, which makes sense with the price being at 86 cents. But hopefully there's some good news that comes out of this because their projected revenue is planning to go up as they go into 2025, meaning next year. It kind of plateaus in this year. So if there's some positive news coming out of this, I suspect this to potentially go up, not going up significantly like above $1, but definitely could be looking at the price target of 90 cents. So my price target for fuel cell as their earnings continues or as their earnings is coming up is going to be this 90-cent level. Next, we have Broadcom, ticker sign AVGO. Now, Broadcom is a popular one in the AI space, so Wall Street definitely is going to be looking at this one. They're a large company. Their current stock price is $1,406.64 at the time of recording this. So their their price per stock is more than NVIDIA. They are a huge company as well in the AI space. Not really talked about as much as NVIDIA, But I think they also, add a lot of AI capabilities to the market. So they kind of plateaued towards the end of trading on Friday around this $1,400 level, shot up to $1,425 even, and then after hours went to $1,406.64. So overall, I think the sentiment for this one is bullish. They are above the moving average 10, 20, and 30. Moving average 10 is at $1,411. Well, they're above the moving average. Let me take that back. They're above the moving average 30. So bouncing off the moving average 30, going to see if they can retest that level, which is $1,413. And then the moving average 20 is at $1,408.43. So if they can retest those levels, retest that moving average 20 at 1,408, and then retest that 1,413 level, going to be looking at 1,425 as a high level for me. So I think overall, Broadcom has a lot of things going on for them. Let's jump into some news about them. So there's some coverage on here. Melius Research just gave them a price target of $1,850 per share, representing a 31% uptick, and saying it's a must-own AI stock. So going on here, talking about Broadcom has already been a winner in the AI boom, with the stock up more than 150% since the start of 2023. In its fiscal quarter, which ended in February, the company reported organic revenue growth of 11% as it experienced some tailwinds from AI as well as headwinds from the earlier slowdown of the semiconductor sector. However, it is expected a significant jump in adjusted earnings before interest, taxes, depreciation, and amortization, or EBITDA. Some people, you may have heard of people just saying EBITDA. That's what it stands for. This year to 30 billion, due in part to the impact of acquiring VMware, which I think was a huge acquisition for them as well. Broadcom now trades just over 30 times earning, and the company can capitalize on AI booming, showing accelerating revenue growth, and the stock can continue to move higher. So I think with that news, them acquiring VMware, which is a huge company, and already had a large market share, I think that they continue to grow. I think this is going to be one that's on the list for a lot of the institutional investors as well, especially since they're so large in AI. And if we saw, with the moves that happened in NVIDIA, I think 1,800 may be a very generous level for them to go on, but we'll see as the market opens. If they start to shoot up and blast past this $1,425 level, I'll probably looking at 1,500 for them. But as you know, earnings can be pretty dicey. And so, having them jump up significantly after earnings is something a lot of options people look at as far as volatility is concerned. So the options market will be looking at this one. But with them being centered around AI, I think Wall Street in general will be looking at this one. So price target for this one for me as the week begins on is going to be 14.25. And then as the market progresses, and continues on, I'm going to be looking at that $1,500 level for Broadcom. So they do have their earnings. Their earnings is going to be on Wednesday after the market. So bear in mind, after the market on Wednesday, they will report their earnings. Next on here, I have Adobe. And so Adobe is going to be having their earnings next week as well, which will be Thursday after the market closes. They have been on a bullish upward trend, ending the week at $465.10. Kind of a little bearish downward trend after closing, but bouncing off of this moving average 20 level, which is at 464.22. And so moving average 10 is at 466.61, and moving average 30 is at 463.31. So overall, they hit 468.93 as the market continued to go on. That's going to be a key level I'm looking at for them. Adobe also has interest in the AI space as well. There's some things they're doing in AI, which we'll be talking about a little later on. But I think for the company overall, Adobe kind of has integrated into a lot of different systems. They do a lot of things, as far as processing uh, documents and having, different software updates that they're doing. I think they can be poised to run up from this level. So going to Adobe stock, the digital media and marketing software firm Adobe, ticker sign ADBE, on Thursday officially launched generative artificial intelligence assistance for its marketing software, and the Adobe stock rose on the news. They announced the general availability of its Adobe Experience Platform AI Assistant, and the company unveiled the tool on March 26th at its Adobe Summit conference. The tool has an AI powered conversational interface that allows brand employees to automate tasks, simulate outcomes, and generate new marketing content. Adobe says its AI assistant will boost organizational productivity, and the assistant works with existing workflows across Adobe's enterprise applications, such as Adobe Real Time Customer Data Platform and its Adobe Journey Optimizer. And so I think with the company adopting AI, and really targeting it to go through its suite of products that people are already using, I think is an advantage as well. I think it will help the company moving forward. But kind of want to see, how this is incorporated and how customers are really using this to increase their workflows across all their products that they already have. And so, going to be seeing how, during their press release, how this is going to be integrated more, and seeing what their projected numbers are for integrating this Adobe Experience Platform AI Assistant with the rest of their company products. And so, going to be looking at this 468 level, potentially a $500 level for Adobe. I don't think that's unreasonable, but I think, the hit or miss for this one is going to be their financials. Just because they incorporated AI suite technology to their system doesn't mean automatically that it's going to go up. I want to see the numbers on Adobe, and then going to see how that's going to be impacting into the future, and if their existing customers need or want this service for their platform. Next one we have is Oracle. So Oracle is pretty bullish. Moving average 10 is at 124.86. Moving average 20 is at 124.33, and moving average 30 is at 123.95. They ended the day at 126 even on Friday. So bear in mind, this is when the market was closed. So tomorrow the prices will change based on how the market reacts during open. So bear in mind, this video is recorded when the market is closed. And so ending the week at $126 definitely on a bullish upward trend. They shot up to 126.22. So I think there's going to be some bullish sentiment around this. Their earnings will be on Tuesday after the close. So bear in mind, on Tuesday after close, Oracle will be reporting. Some interesting things going on with Oracle. If we go to this article on here, Oracle is scheduled for its for its fiscal report of quarter 2024 results on June 11th. For the fourth quarter fiscal of 2024, total revenues, including Cerner, are expected to grow 4% to 6%. Total revenues, excluding Cerner, are expected to grow from a range of 6 to 8%. And then Zacks, which is, I think, a great source for market analysis, consistent estimate for revenue is currently pegged at 14.56 billion, suggesting a 5.2% growth from year ago quarters. So basically quarter over quarter or year over year. And then Oracle's non-GAAP earnings per share is expected to be flat to down 2% in the range of $1.62 to $1.66. The consensus mark for earnings is pegged at $1.64 per share, unchanged over the past 30 days, and the figure indicates a 1.8% decline from the year ago period. The top line growth is expected to have been benefited from Oracle's strong cloud business that has been riding on robust demand from Oracle Cloud infrastructure and autonomous database solutions. The cloud-based applications encompassing NetSuite Enterprise Resource Planning, or ERP, and Fusion ERP are witnessing strong adoption, bolstering Oracle's position in rapidly evolving enterprise software landscape. Oracle's Gen 2 cloud architecture is delivering superior performance at lower cost, leveraging high bandwidth and low latency RDMA networks, thereby offering a compelling value proposition to customers. With the continued investment in expanding its cloud infrastructure footprint, Oracle is strategically positioning itself for sustained growth in dynamic and fierce competitive software industry. And so, definitely want to see some numbers on this Oracle Gen 2 architecture, and how they're implementing it into different companies. I know cloud based technology is not a new thing. There are a lot of companies that focus on the cloud, but Oracle is kind of one of the biggest companies that focuses on cloud. I also want to see a lot of companies talk about partnering with NVIDIA, and I want to see how they're going to be incorporating, their cloud-based computing or cloud enterprise suite with NVIDIA, if they're going to be updating some of their technology um, based on what NVIDIA is doing, and how that efficiency or partnership would help Oracle. Next, we're going to talk about GameStop. So GameStop's been in the news a lot. Roaring Kitty last week had a live stream talking about his shares. He showed his position. Talked about in a video last week on a previous podcast about Roaring Kitty and his position. So make sure you go check out that in a previous podcast. But GameStop's definitely going to be all eyes on GameStop for next week. If we look, we can see they hit a high of $48. And this started to taper off right when Roaring Kitty started his live stream. So they were bullish, hitting this $48 level, and then as the live stream, kind of continued, it kind of shot down to $28.22. So I don't think this is a bad level overall. I think there's still some potential. There's a huge following around GameStop and all the things they're doing. They did report their earnings last week, so that's something of note. I don't think this was a sell-off, based on that. I think it's just people were profit taking. I think there's still a larger setup for GameStop overall. So they are bearish though at the current moment at $27.16 where they ended the week. Moving average 20 is at $35.60. Moving average 10 is at $31.11, and the moving average 30 is at $34.39. So going to some news on what happened, why the stock plummeted. So GameStop stock sank nearly 40% Friday in a highlighting or in a highly volatile trading as GameStop failed to sell millions of shares, and more than 500,000 views turned on the much anticipated YouTube live stream Roaring Kitty, with the alias used by bullish retailer Keith Gill. So Keith Gill is Roaring Kitty. The event marked Gill's first live appearance on the channel since the investor helped ignite the meme stock rally in 2021 via his bullish videos and posts about video game retailer. The stream kicked off with a video clip of kittens playing Inner Speed with shots of Gill, and then he appeared in front of the screen, which is shown here down below. It becomes a bet on management, in particular Ryan Cohen, who's the CEO. That's what folks should be focused on, is what he said. So focus on the CEO and what he's doing in the moves, not just him, Roaring Kitty. He also added, I see enough where I believe this guy may be able to do it. He noted that nothing on the stream is advice. And then he also said a screenshot from GameStop holding posted earlier this week on social media. So he basically confirmed his position, showed that he was still holding, and says he's basically, counting on Ryan Cohen to help make this work. So the account showing his positions are mine. These are my positions. I'm not working with anybody else, and I'm not working with hedge funds. So he basically confirmed the rumors from the post that was on Reddit saying, hey, these are my accounts, showing his accounts, showing his position, and saying, hey, I'm still holding. These are not hedge funds. I'm doing this solely by myself. The stock was halted more than a dozen times on Friday amid highly volatile trading, and it's been plunging before the YouTube streamer in the wake of quarterly results that missed analyst estimates and announced a stock sale. For the fourth quarter, GameStop posted an adjusted loss of 12 cents per share versus the estimate loss of 9 cents. Net sales dropped 29% to 882 million versus analysis estimates of 995.5 million. Wall Street was expecting the quarterly results last month, and the company filed to sell up to 75 million additional shares. Last month, GameStop sold 45 million shares, bringing them to about 930 million in proceeds. The announcement came on the heels of the stock's 47% surge in a prior session after Roaring Kitty scheduled a live stream, and then after the market closed on Thursday, Roaring Kitty's handle, which is Deep Effin Value, also linked to Gil, posted a screenshot showing the user's portfolio ballooning to 586 million, including GameStop's holdings and unexercised options positions. And so overall, I think it's been a very volatile ride for GameStop. There's kind of like bigger parties at play. I think it's kind of a mix between institutions not really liking an individual person being able to manipulate the market or what they think is manipulating the market. But I think also on the counter, there's market manipulation going on by halting a stock 12 times. I think that's it's kind of a dual-edged sword. You have Gil or Roaring Kitty, who basically is showing, hey, I'm just a solo investor. This is what I'm invested in. This is the stock that I'm passionate in. And every time he posts it, the stock kind of goes up, or people get excited about seeing someone actually holding such a large position, and then people want to buy. But then the double-edged sword portion is places like Robinhood or E-Trade or even having the SEC themselves halting it 12 times where you can't buy it, you can only sell it, kind of proves the case to where people are arguing it's not a free market. So free market being, retail investors should have the same rights and privileges as the hedge funds do. But the whole GameStop thing kind of started where they were like, hey, we're kind of exposing that there is a little bit of favoritism that goes on with hedge funds versus individual retail traders. So whatever side that you pick on there, it definitely is interesting to see it all play out and to show, 12 halts or a dozen halts on one stock in one day is quite ridiculous, in my personal opinion, especially since there's a free trading or it's supposed to be a free market. I do understand the point of the SEC is to make sure that there's fair trading, that people aren't, it's not a casino. So it should be for investing. It should be for people who are making detailed analysis and being able to earn money based on that for fair market prices, and not be gamified. But then on the other hand, it's kind of a balancing act between the SEC is trying to protect people from losing large amounts of money, trying to gamify the stock exchange. But then it's like the hedge funds, which have larger positions and larger amounts, could really go under because they're betting or over leveraging so much of their capital to bet on these positions that people are finding out. So I think it's definitely a balancing act between the two, seeing how the hedge funds or institutional investors really invest into these companies, and when their position really is exposed, how the SEC and how retail reacts. So I don't think that these two entities, being retail versus institutions, should be pitted against each other. Also don't think that the SEC, it kind of puts the SEC in a bad position because they have to be able to regulate the market so that it's fair for everyone. But when you have a struggle going down like this, it kind of puts them in an awkward position because people can say on one hand, oh, well, the market was halted 12 times, so institutional investors have an advantage because they work with the SEC. But then it can be on the other side where it's like, okay, everyone put their money into this one stock, and 15 or 20,000 people were able to benefit from it because they knew or were tracking this one person, being Roaring Kitty, and were able to make trades on there. But then it's also like, how do you protect the people who missed the rally and end up losing large amounts of money because they missed it going up and bought it but right before it went down? So I think it's a very difficult position to be in, but that's why they pay the SEC the big bucks to manage all of those um, interactions. And then also they have the ability to halt um, the market. So whatever side you pick, I think it's very interesting, but I don't think this is over. I think it's just, starting to ramp up just like it was in 2021 because those positions have not expired. And then also, Roaring Kitty showing he's still holding those positions. And there hasn't really been much big statement from Ryan Cohen, being the CEO, on what his thoughts are on this overall. And so definitely I'm keeping an eye on GameStop. Next, we have NVIDIA. So NVIDIA saw some cool off last week. There was definitely some profit taking that went on. They hit a high of $1,255.87, but then overall ended kind of bearish at $1,207.80. Maybe some money moving from NVIDIA to Broadcom, as Broadcom is going to be giving their earnings. But overall, I think still bullish in the long term. I think this is not the end of the rally for NVIDIA. I just think there's some profit taking happen for the stock overall. So ended the week at $1,207.80. Moving average 20 is at $1,204.80. Moving average 20 is at $1,200.58. And the moving average 30 is at $1,203.39. So overall, it is above the moving average 30, 20, and the moving average 10. So on a small bullish upward trend, going to be looking to see if it can retest this $1,255.87 level for next week. So also bear in mind there are some things going on with NVIDIA. So on Friday, they will be officially announcing their 10-for-1 stock split. And so I'm going to briefly explain, what happens in a 10-for-1 stock split and how that will affect you if you are holding shares or if you plan on buying shares before the split happens. And so NVIDIA stock price has continued to climb since the chip maker's blockbuster's earnings, and a 10-for-1 stock split announcement last month, with record highs lifting NVIDIA's market capitalization to above $3 trillion ahead of the stock split on Friday. After the split, NVIDIA's price will be a fraction of what it was before the split, though a lower price could make NVIDIA's stock ownership more accessible to a wider range of investors and boost demand, potentially leading to more gains for NVIDIA investors. So a lot of people may be asking, how does the split work? And so the split will affect shareholders of NVIDIA common stock as more of the market closes in on Thursday, with investors receiving 9 additional shares after the market closes on Friday. In the first half of the day, NVIDIA split adjusted trading will be on Monday. So after the split, there will be 10 times as many shares of NVIDIA common stock at a lower price point for individual investors without impacting the total value of NVIDIA's holdings or the company's market cap. So the price doesn't change. You just get 10 stocks for the one that you're holding. If NVIDIA shares were trading at example around 1200 before the split, for an example, investor holding one share of the split, one share before the split would hold 10 shares at a price of $120 each after the split. With a lower price per share, the split could make ownership more accessible to a wider range of investors. And so what could happen after the split? So after the stock split, some investors may view the stock's price as more affordable and decide to buy, driving up demand and in turn leading to a rise in stock's price. For instance, when Amazon executed its 20-for-1 stock split in 2022, shares rose in the days after following the split. A stock split can also signal the market that the company's stock price has been increasing enough to justify the move, and investors may believe this growth will continue in the future. Historically, stock splits are bullish for companies that enact them, gaining 25% over a year later versus 12% in the broad index, according to research from Bank of America. This split could also raise NVIDIA's chances for joining the index like the Dow Jones Industrial Average or DJIA, as price-weighted indexes like the Dow tend avoiding adding high-price stocks because the movement in their price could be outsized impact on the index. The highest priced stock on the Dow were United Health Group or UNH at $498.78, Goldman Sachs at $495.62, and Microsoft at $423.13 as of last Thursday. NVIDIA's price of $1,199.33, Amazon joined the Dow earlier after its 2022 split. So the inclusion in a major index can help fuel shares gains as well by boosting name recognition among the investors and driving mutual funds and exchange traded funds that mirror the index to add the stock to their holdings. So I think overall it is a great play in a business sense for NVIDIA to have this 10-for-1 split. If you look in the future or look in the past, really when companies start to rally like crazy, they're getting a lot of money or a lot of capital and the price goes up, they usually give a split, and a split is definitely a positive indicator for a stock. So one that I can say in the past that helped company was Tesla. So Tesla shot up. I don't know if you remember back, I think it was like 2021 or either 2020 or right before 2020, Tesla shot up to like, it was like $2,000 or so a share, and then they had a stock split after their earnings. They continued to go up since then after their split, but the split was kind of like the indicator to, hey, we're making a large amount of profits. We're going, to try to apply to get into the S&P 500. So I think they got into the S&P 500 after that split, or sometime after that they were applying to get into that, and then they got put into the S&P, which I think was a huge deal, but the split had to come before there. So this is kind of, how companies go as time goes on. The split is not a negative thing. I think it's a positive, showing, hey, we're poised to have continued growth, and we want this to be attractive for more people. So there are kind of two things you can do in this situation, which is to buy before the split and then have 10 shares of the company, or you can wait and just buy it at a cheaper price and start the journey there. I don't think this is the end for NVIDIA. They have way too many things in the pipeline as far as products and collaborations with other companies. I think it's going to continue to go up. And if you want to look at a use case for this on how splits work, you have Amazon, Microsoft, but I think Tesla is definitely a great case. Tesla shot up tremendously, then they had their split, and more people just loaded up on shares after their split happened. So I think it's a great news for the company and definitely makes it more attractive for individual investors. If shares are like $120 or $200 per share, it's definitely more attractive to get even a fractional share of that 200 because you can get fractional shares than for someone to try to get fractional shares of a $1,200 or $1,400 stock. So I think NVIDIA is going to be key. People are going to be looking at it before the stock split. There's going to be a lot of market analysis this week talking about what people are going to be doing before the split. And there's also going to be more talk on what's happening after the split. So before the split, I think people are going to be talking about allocation, trying to get more shares, or what they're going to be doing before the split. But I think after the split happens, I think all of their focus is going to be on their new technology, on their Blackwell chipset, and how that's going to be affecting the market and more partnerships in the company as a whole. So these are the stocks that I'm going to be looking at this week. FuelCell, AVGO, which is Broadcom. You have Adobe, Oracle, GameStop, and NVIDIA. Drop a comment down below. Tell me what you think about these plays. Which one do you think is going to be the most popular this week? I think GameStop and NVIDIA will probably be the top two. Well, the number 2 and number 3 this week, but I think Broadcom, with all the stuff that it has going on, is going to be very interesting as well. I wouldn't be shocked to see Broadcom, follow suit with NVIDIA and have a stock split as well as pricey as Broadcom is. I think a stock split for Broadcom may be in the works as well. So, going to be looking at Broadcom as my number 1. Then going to be looking at GameStop and NVIDIA, and then going to be looking at FuelCell, Adobe, Oracle, probably in that order. So, good luck to everybody out there trading, and I'll see you guys on the next one. Peace.